This is our Forex blog for April 24th, 2013, and these are currency indexes. We compare all the dollar pairs and actually create a synthetic chart of the dollar. This is a yen index. This is showing you what all the yen pairs are doing, and it lets you see a lot more information than in the past. We've focused in the last 7 or 8 years on currency meters that show you statistically how strong or weak each currency was, and we show the daily, weekly, monthly trend underneath that. And ideally, when all the time frame trends lined up and the real-time trend was intense in the direction of the longer-term trend, you would want to buy or sell that one versus one that was in the opposite direction, like the pound here. For the most part, the intensities to the upside, daily, weekly, monthly trends up. Now we see more information. We see the hourly moving average of the pound. And above that, it tends to go up. Below that, it tends to go down. We see the previous day's high in the pound index, the previous day's low in the yen index. So if a currency comes down to its low and the longer term trend is up, you can certainly look for a double bottom, buy, and buy it. Now this one found a double bottom and went up even though the longer term trend was down. But your odds go up when you are buying the lows in a currency where it's been going up over the last few weeks. We also show you the point of control. This is where most traders have positions in each currency, and it lets you see whether it went up or down the previous day. So the Japanese yen had a very big up day yesterday. All the yen pairs went up for the most part, and it went up significantly. So seeing that the point of control here went up 83 pips, you can more confidently buy the double bottom here, especially when it fell with a lot of weakness, and then it formed a double bottom without much weakness. You also have the Bollinger Bands on this Japanese yen index, a very high probability place to buy with the hourly moving average, your likely profit target. So I'm going to show you how to anticipate future price moves. And you know, there's a whole bunch of different things you can do with our indexes. You can spot trend line breaks. Failure to go above the previous day's high breaks the trend line. Excellent place to sell right here, given the fact that the weekly trend is quite weak. You would want to sell this one right here versus a currency that's strong. The euro is going up right now, although yesterday it was it fell 28 pips as a whole. The pound is very strong, and it just got done going through a pullback. It's really near its 15-minute moving average in green, hourly moving average right here. If you sold this and you're watching, in other words, you bought the pound Australian, pound strong, the Australian's weak. If you see the pound going up and this one going down, you're probably going to make 20 to 50 pips. If this one falls and this one falls as well, you have a chance to get out of this trade at break even. If the pound goes sideways and this one falls, you're probably going to make 15 or 20 pips. So you know ahead of time what to expect, and you watch it real time at 6 o'clock right here. So let's bring up a chart. Pound Australian, we want to buy it at 6 o'clock. And you can see on this chart, 6 o'clock's right here. Previously, the pound Australian had fallen, and it tried to get back above its hourly right here, and it failed. And typically when it's underneath the hourly, you want to look for sells above the hourly buys. But you can clearly see it made a higher low right here, and it didn't go below the previous low right here as well. 6 o'clock, you're looking potentially for it to go above the previous bar's high. Your risk is super tiny, and your profit target is right here. If it continues up, by all means, hang on to the trade. But typically our perfect oscillator, especially when the previous move was down, anytime it hits plus 80, you tend to get reversals. And you can see that's exactly what happened here. An extreme area right here, reversed, right here. You can see the market pretty much went sideways. It went down a little bit, then went up right here, nailed the high, right here, nailed the low, right here, and here. This one here failed, but it wasn't quite at the extreme. This one here worked. This one right here, you can see nailed the high. This one right here, for the most part, you got a little bit of a bounce, and then the market kind of went sideways after that. So anytime you're in a trade and you see it's really close to the perfect oscillator, extreme plus 80 overbought level, you want to get out. So as this thing was going up, you'd really probably get out somewhere up here around 48.70. You're in this trade somewhere around 50. You made 20 pips while risking less than 10. That's a 2 times bigger profit than what your risk is, and very easy to anticipate using just something as simple as a trend line break. Another thing you can do when you're watching a currency, like the Swiss, it came down and broke yesterday's low and came back above, went above the hourly moving average, forms a nice little sideways rectangle pattern right here. And anytime you have a rectangle pattern in the direction of the long-term trend, which is clearly down, when it finally breaks out of that rectangle pattern, you can look to sell it, and you want to sell it versus whatever's strongest at the time. So if you look at this right here, the Swiss, the dollar's trending down right now, so is the euro. The pound's kind of going sideways, the CAD's going sideways. The strongest one on the whole chart is the New Zealand right here. So we would look for a New Zealand Swiss sell at 355. Sorry, take that back. We're looking for a New Zealand Swiss buy at 355. And typically you want to wait for it to go above the previous bar's high. So here's 355, and this one, you know, was trending up against most of the pairs already. So you wait for it to go above that bar's high here, and usually the upper containment band is a good place to get out. Notice, you know, you might have avoided that trade mainly because it's really close to the extreme area here. And anytime you see the plus 80 perfect oscillator, you probably want to drop down to a tick chart and really watch it like a hawk so you can catch as many pips as possible before it reverses, because it almost always does. You know, keep in mind here, right here, reverse down, right here. This one kind of went sideways. It didn't really get a reverse here. It found this little high here, came real close to it right here, nailed the low, especially when it's above those areas. Notice, you know, reversals each time. Right here, the market reversed back up. So again, don't be greedy. Extreme went way above the 80 level here. Guess what? It's the end of the move. As you can see, it's a very accurate tool. That's why I call it the perfect oscillator. It doesn't use a look back period like the MACD and all those other oscillators do. It uses statistics on the last 20 days, and it looks for extreme moves for this time of the day. It knows what a big move is at different times of the day, and it clearly lets you see that. And in fact, one of my favorite ways of trading is when the trend is up. As you can clearly see, focusing on buying at these levels. You know, you might have had a loss here, you got back in it again here, made a lot of money on that one. This pullback right here, you made a little bit. This area right here, it's during the time of the day which is kind of dead, but it did go up. You know, so anytime you get a minus 80 reading when the trend's up, very high probability place to buy. Most people trade the euro, the pound, you know, or dollar and yen pairs. So looking at these 4 pairs, you can see a lot of information. You can see potential profit targets. If, let's say, you bought the dollar, this is yesterday's high, it's likely to find resistance there the first time. The Japanese yen, very weak trend. So, you know, if it comes up and can't get above the hourly here and starts to go down, excellent place to sell. The pound, very strong, can't seem to get below the hourly here, which is a very positive sign, a sign that, you know, you want to be looking for buys, especially if it goes over these highs and it works its way up to the high of yesterday for the pound index. It's got a good room to go. Anytime you have a currency that's likely to go up and has a decent amount of room left to travel, you got to take a stab at it. You can see the euro broke down underneath yesterday's point of control, which was down 28 pips yesterday. The fact that it couldn't get back above this resistance area right here. Anytime a support area is broken, it becomes resistance. During a retest, if it can't you know, get back above that, it's very likely to go down lower. And you also have your fib levels on these, where those are excellent profit targets. In other words, if the euro breaks down this low, or even if you got short right here once it started to go down at 335, you don't want to trade the euro versus the dollar. It's going down. The yen's trend is down. The pound's the strongest of these 4. Coming up to 4 o'clock, the euro pound makes sense to be selling. So let's scroll forward, coming up to 4. And notice that this one had just recently gone from above to below the hourly, which means the euro is weak and the pound is getting strong. We have a pullback right here. I prefer it when it actually touches the hourly and fails, but you might actually have went short right here when it went underneath these bars low. And you also have your fib target of this one as well as it works its way down. Notice these fib targets, the lower containment bands. You probably want to exit half your trade there and trail the other half. You know, I probably would get out of the second half right here. But let's go back and look at the indexes. If you get short, you can see the euro's falling. The pound, unfortunately, is not going up. So, you know, if the euro hits these fib target levels, it's probably going to get a little bit of a bounce. It actually went right to the 2.0 fib area. It's likely to work its way back up a little bit. And at this point, you could wait for a 38 to 50% pullback if you're lucky enough to get one. All right, 38. All right, now so it went above the 62%. If it found resistance right here, it started going down, you look to sell it. For whatever reason, at that time, it's strong again. So you could look at the yen, which was the daily, weekly, monthly trends down. You clearly have a nice little trend line right here that got broken. Couldn't get above the hourly. Very high probability place to sell right here. As you can see, of all these four at this time, the pound's the strongest, and it also has the longer term trend that's up. Coming up to 5, we'd want to be buying the pound yen. Just trying to give you ways of anticipating trend. So coming up to 5, you can see the previous high of the day. You can see the high of this last move yesterday, 152. Obviously, you don't want to buy the absolute high. I don't like to buy breakouts. I prefer kind of to watch the currencies and try to get into these trades a little early. But if you do buy the high, keep a very tight stop, because a lot of times breakouts fail. Comes back down, you can always re-enter, but you know, if you try to see a pullback to the hourly right here, which finds support, it's kind of going sideways and breaks out. It's much easier to get into a trade right here. Put your stop right underneath that low with a much lower risk. And obviously with this, you also have the fib targets as your likely profit target. Now again, it's trying to stay above this high right here. If it comes back underneath 152, you can get out with a small profit. You can also exit half your trade right here and let the other half run. So, you know, it just seems to not be breaking out and going higher. And also notice, I didn't notice this at the time, it hit the plus 80 level in the perfect oscillator. So if you got into that trade, you probably do want to get out right here and wait for a little bit of a pullback and get in again. Again, the power of the perfect oscillator will really help you avoid a lot of losses. Now you can see this one went down a little bit more and then reversed up for the next 7 or 8 hours. So most of the time, this one right here failed. This area right here worked. This area right here, this was a super strong pullback or trend. It pulled back a little bit. Usually when these are at the upper containment bands and you have a plus 80 reading, you're going to get some kind of a pullback. Notice the area right here exploded up off of that because the trend was up. This was probably like a 50 or 62% fib pullback right there. So there's a lot of different patterns you can use, and I will scroll forward and showcase those right now. Double bottoms, especially at support, trend line breaks. You can see the euro broke its trend line around 7. So what was strong at 7? It wasn't the yen at that time. The pound in the New Zealand was the strongest at 7. So euro New Zealand sell at 7, and you can see 7 o'clock, it goes down. We'll put the euro pound on there, 7 o'clock. This is one we had on before. You can see it also went down. So trend line breaks, double tops, double bottoms, flag patterns, wedge patterns are all methods you can use for spotting high probability trends. Let's try to find a little wedge pattern. Wedge patterns kind of something where the market kind of goes up, down, in a very tight and tighter range. So it looks like a wedge. We don't really have those kind of patterns today. We do have a double top right here, right near resistance. You can see it wasn't able to get above that, kind of going sideways when it breaks down. It's probably likely to work its way down to the hourly, which is where it found support. So at 7 o'clock, you could sell the pound versus one that's likely to go up. Now, obviously, the euro also had a sell signal at 7. If a currency's strong and all the time frame trends are up, you're still going to probably, like you saw, make money selling one that's likely to go down versus the other. But you're better off spotting one that's, has a reversal signal against one that's likely to go up. You can see the CAD's longer term trend is up. This one right here at 7 found support the previous day's high in the hourly. So at 7 o'clock, the pound New Zealand, very likely to fall. Very high odds. This will be the last example today. And not all trades work. This may not have worked. 7 o'clock, you can see it's really close to the hourly. And for the next hour and a half, it does fall. So a pretty decent amount too, almost 40 pips. So by just simply using patterns on our currency indexes, you should be able to make 20 to 30, and sometimes on good days 50 to 100 pips in a few hours.